Don't give thought to things that you cannot change. April 17th, 2026. We're going to go over the market today. We're going to go over the alignments that occurred today in the NASDAQ. And if anything else comes to my mind, we'll go over that. I'm going to start this episode off by telling you what has happened in the past, in my recent past in my life. I've been trading now every day of the market. I haven't really missed a single day of the market at all, actually. I don't think I've missed one. I've been trading every day since January 1st of 2025. So that's many days. Because right now it's February, or right now it's April 2026. So that is a lot of days. And I've journaled and cataloged every single trade that I've ever made, and I'm up to like number 1,420 something, 1423 maybe, 1424. Over 1,400 trades I've placed since January of 2025, and I've learned a lot. And once I started becoming profitable with trading shares, not futures, not options, just shares. Once I became profitable with that, I said, okay, it's time to go to the futures market because the leverage is extreme and you can make great sums of money with that leverage. So I don't want to repeat the past, because a year ago, about a year ago, August to December of last year, I traded futures with my cash account, and I lost $2,500. I was doing good. I would make some money. I would make some money. And then I would lose it. And I would put some more money in the account. I would do good. I was doing good, and then I would lose it. And I repeated that, such that my total loss for trading futures was $2,500. So since then, which that again was last year, around October of last year. So it's been 6 months. The past 6 months I've been doing nothing but working on my performance, working on my execution, working on my discipline. And it paid off. I became disciplined. I became a consistently profitable trader with my strategy. And then April 4th, which was this month, not too long ago, 2 weeks ago, I started my first prop firm with Alpha Futures, a $50K standard account, which costs $79 a month. And I started that evaluation, and I was doing good. I was doing really good. But then, last night, April 16th, I blew that account. I was having a glass of wine, or maybe a couple glasses of wine, trading the Asia market open. Not the New York session, which is the right time to trade, but trading the night market, because I was feeling confident. I'd been doing so good after all. Took a few losses, started to size up. Sized up even more. And blew the account. Now, it's better to lose a $70 whatever evaluation. It's better to lose $70 than to lose a $700, right? That's obvious. But if I could explain to you and describe to you how bad I'm feeling right now, I guess that's a marker for how much this means to me. Because if it didn't mean very much to me, it probably wouldn't affect me very much, but it affects me deeply. I couldn't even sleep properly last night. I broke my rules. I traded the night session while having some wine, and and I broke my rules and I blew my account. I might be 33 years old, but in my mind, sometimes I feel like I'm still 13. We're going to get into the trades today, and we're going to look at the alignments that occurred. And before we move forward, I'll add in that this morning I woke up and I reset your account. You know, when you fail a prop firm evaluation, you can reset your account. You can spend some money, $50 or whatever it may be, to reset the account to try again. And that's exactly what I did this morning, because I'm not going to give up. I'm not going back. I'm going to become a powerfully disciplined trader. I'm going to become a consistent, confident, calm, meticulous, disciplined trader. And when my time comes, it'll come. I'm not going to stop. In the market, we had a continuation of upward momentum matched with volume, meaning that this is likely not just a push up before we sell off again. This is likely just a true push up. This is the daily chart on the NASDAQ. We're making all-time highs soon. SPY has already made all-time highs, I believe. It's probably the most powerful upsurge we've ever seen. At least in recent years, past 2 or 3 years. Let's go over the alignments that occurred today and talk about the market. We always establish our pre-market levels and our previous day levels before the day begins. So we mark the previous day low in the light blue, and then we mark the pre-market low in the dark medium blue, and we mark the previous day's high in a light red or pink, and then we mark the pre-market high in regular red, medium red. And it's important to watch how these levels play with the price action. Look how the pre-market high played around with the price action today. Look how it acted, not as a support or resistance, but look at how it acted as an anchor. Look at that. Pretty interesting. Let's go over the alignments that occurred today. The first alignment that happened today was right here. No alignments occurred in the beginning of the market. Why? Because the 5-minute twins, the 5-minute regular hours and the 5-minute extended hours, were not in sync. Notice how they're going different directions. So that means there's no trade opportunities yet. Later on in the market, after the first 45 minutes to an hour of the market, so here's the market open, here's about 60 minutes into the market right there. After about 60 minutes, you want to switch to your 2-minute chart, because the 2-minute chart starts to become more reliable. The 1-minute chart starts to have more, you get wicked out, you get thrashed around too easily. So going to the 2-minute chart after about an hour of the market open is good, because our time frame of execution needs to be corresponding with the level of relative volatility. The relative volatility in market open is high, so we need a more precise execution time frame, maybe a 30-second time frame, maybe a 50-second time frame, a minute time frame. But then as the day goes on, things slow down, and that's where the higher time frames become more relevant. So 2-minute, 3-minute, 5-minute. You understand. The first alignment that occurred today was right here. Notice this 5-minute regular has stopped falling and is now leveled. Notice how this 5-minute extended is now pulling to the upside. 15-minute is in the green and strong. 30-minute is in the green and strong. The 1 hour is obviously going strong to the upside. So we wait for a volume confluence on the right side of the momentum, which happened right here. We had a bar break. Look at this. A candle bar breaking above the previous. So bar break. And we had an increase in volume. Not a powerful volume confluence, but an increase in volume nonetheless. And our momentum is going with the direction of all of these higher time frames. So the first alignment channel that occurred today was that one right there. Now, if you enter at the close of the candle, like I tell you to, then you could have obtained a 1-to-1. You could have obtained a 2-to-1 as well. That was the first alignment channel of the day. The next alignment channel of the day was right here at 12:10. The 5-minute twins are going down. They've leveled off and now they're starting to go down. Leveled off, starting to go down. The 15 is now crossing into the red. The 30-minute is still in the green, so it's a weak setup. This is not a super powerful setup. But the 30-minute is tapering down. Look at the momentum of the 30. Is tapering down, right? So that's the alignment. So here was the signal. We had a volume confluence on the right side of the momentum on the execution time frame on the 2-minute chart. So the next alignment channel for today was this one right here. If you enter at the close of the candle, a 1-to-1 would have hit, a 2-to-1 would have hit, a 3-to-1 would have hit. Let's go to the next alignment that occurred, which is right here today. The 5-minute histogram pulling up, and now it starts to stall, and now it's coming back to the downside, which is what we need. Why? Because the 15 is going down. The 30-minute is going down. We need all of these to be going the same direction. 5-minute twins are now starting to go down, so we look to the execution time frame for a volume confluence, and we see it right here. Volume confluence. So the next alignment channel was right there. Entering at the close of the candle, you would have achieved a 1-to-1. You also would have achieved a 2-to-1. Next alignment of the day happened right here. Why? 5-minute twins moving to the downside right here. 5-minute going to the downside. Into the red. Touching the red right here. Touching the red. 15-minute and 30-minute are in the red as well, right? They're going down. Had a semi-strong, weak, not really a strong volume confluence, but our momentum is going the correct direction. And what do we have? A bar break. A bar breaking the previous bar. That was the next alignment channel right there. Had you entered at the close of the candle, you would have had a regular target hit, and then also you would have had a 1-to-1 target hit as well. So that was all of the alignment channels that occurred today. And with all of that being said, I'll see you in the next one. Take care now.